Hi, I'm Christopher McClinton, and welcome to this episode of Extensible Podcast. Today, we're going to be talking about the convergence of real-time payments and real-time platforms. And this has a lot of implications for a number of domains of banking, and I have the good pleasure and good fortune today to be talking about this topic with somebody who knows lots about it. Welcome today. Appreciate you being with us, Rusiru Gunasena from the Clearinghouse.
Thank you, Christopher. Pleasure to be here.
Rusiru, maybe take a minute and just help our audience understand how you've come to the role that you have right now at the Clearinghouse, and maybe what you were doing leading up to that. Because certainly, I don't know of anybody better to ask these questions of, given your background.
Thank you. I think we've known before I joined the Clearinghouse, even before you joined Finxact. So my journey began very early stages of the real-time payments. It was only a conversation at that time in the early 2016-17 timeframe. I was with Jack Henry at that time and certainly started the real-time journey from a blank piece of paper to put that strategy, implement a payment hub for all the financial institutions at Jack Henry. And then in 2022, I joined the Clearinghouse and been with the Clearinghouse 2.5 years. I have the responsibility of RTP, real-time payments product and strategy at the Clearinghouse.
Well, really glad to have you with us today. And maybe before we start to get into the subject, just a quick trip down memory lane here that pertains to just the evolution of faster payments in the US over the last decade or so. And we don't have to spend too much time on those milestones, but I think they matter because it led to a very important event in 2017. Obviously, the Clearinghouse coming out with the infrastructure for RTP, but leading up to that, you could go back to 2009, Venmo, I think it was 2010, right on their heels, Dwolla, Fiserv in 2013 with Pop Money, Square Cash as well. And then we saw the folks at Nacha sort of, leveling up as, their game at the time as well, moving to same day ACH. But really, I think if it's okay to say, all of that might have been prelude to what happened in 2017 with Clearinghouse, introducing the first real-time infrastructure for payments, not so much a consumer interface, although Zelle quickly followed, but really the infrastructure allowing for that settlement. And then very recently in 2023, FedNow. But I think it's helpful just to remember, as I said, that context, because all of those were important events in getting to where we are now. And boy, has it taken off. Maybe you could just share a few of those stats with us in terms of the adoption on the RTP side.
Definitely. I think it has been an impressive journey when you look at from where we started to today. Like you said, the first real-time payments network implemented in the United States, that was in 2017. We are in the 7th year of operation. We have over 750 financial institutions live today. Out of that, over 90% are community banks and credit unions. We also have all the major processors live, the TPSPs. So therefore, we have close to 98 technical ubiquity and have the connectivity to all the institutions in the United States. Out of the institutions live, we have over 70% reach for DDA accounts in the United States. So that's also a very impressive journey over the 6 years and in the 7th year of operation to achieve for a network. Because from a network building net new to today, I think that has been very much of a rapid growth cycle. When you look at the transaction volumes and the dollar values, they are also continuing to grow quarter over quarter. We have surpassed the 1 million days. We are now continuing to process more than 1 million transactions a day. And then also dollar value. We continue to see an increase in even the average dollar of a real-time payment. I can remember even 2 years ago when I joined the Clearinghouse, it was under $500. Now it's about $700, $750 average transaction value of a real-time payment.
Which I would say is certainly just an indication of the trust and the confidence in the rails, and that continues to build.
That's absolutely right. I think we see more and more use cases coming on to real-time payments, whether they are net new use cases or existing use cases being moved to the real-time payment rails. Thirdly, I think we can get into the why of that later.
Well, impressive statistics for sure. Thanks for sharing those. I think we could probably spend some time contemplating this and maybe but for today, we'll just give a minute to it. But it was interesting. I recall at the time I was very steeped in the payments space for a good part of my career as well, and we watched some of the real-time payments they're getting stood up in places like the UK, Brazil, India, some other places, but with lots of government intervention, if you will, or just let's say involvement and mandates. Whereas in the States, that's not how we began. It really obviously was more of, I would say, the principal protagonist coming from the private sector. I ticked off several of the company names who were there at the beginning. Then we had the clearinghouse in 2017, really, opened the door for that. And then we did have the Fed, a late entrant, but an important one in 2023. I just wonder, do you see that as really ultimately being a way to get to the broadest adoption, true ubiquity, or just any thoughts on that?
Definitely. I think at the very early stages, even before joining the clearinghouse, I saw some of the hesitation where the financial institutions who were sitting on the fence trying to make a decision whether to join early on to a real-time payment rail or not. And when Fed made the announcement that they're also going to build another real-time payments rail, they went into a pause. Most of the financial institutions who were waiting to see. There was another majority of banks and credit unions continue to join the RTP network. What I would say is when finally the FedNow network was launched last year, I think the wait was over. The financial institutions who were waiting to make a decision now can make that decision and move on. And obviously, they're making the decision to join the network, which has the volume and the reach already, who has the maturity of over 6 years and the use cases which can be supported. So we have also seen a renewed interest and a growth in financial institutions making that decision and joining the network. And also to your point, I think about size of the pie for real-time payments, there is plenty to go around. I think there is also a subset of institutions who can be served by the other networks as well. And I think there's plenty of use cases to go around as well. So the RTP network is seeing a renewed interest and a growth from that.
Yeah, Fiserv, and I think the same is the case for the other core service providers, if you will, facilitating access to both. Ultimately, everybody's shared goal is ubiquity, and it's helping with that for sure, having the options. Well, I was very keen to talk to you and to mostly listen to you about, as I said at the very beginning of our conversation, we're in an interesting moment because as we have just, and as you have just demonstrated with the statistics of adoption that you shared, the adoption of real-time payment rails is out ahead of the adoption of real-time core platforms. So Finxact is certainly one of the few in the category of next-gen core platforms that is absolutely real-time 24/7. There is no end of day. But this creates a rather delicate situation where you have rails and infrastructure for the clearing and settlement of real-time payments, but you have ledger balances that are not reflecting that, not until the end of day. And this can create situations for institutions across a number of different domains of banking where they just have to be careful and they have to be very aware of that imbalance for the time being. And so I was interested to spend a little while with you today, maybe just touching on a few of those areas and hearing your thoughts and whether you want to frame that as, potentially a risk that you should be aware of, or potentially a competitive advantage that could redound to your benefit if you are real time in both places, both for the actual rails as well as the core platform. Either way you want to help our audience think about that would be appreciated. Maybe let's just begin with customer experience, if you don't mind.
Definitely. I think when you look at the customer experience side today, whether it's consumers or businesses, are very much used to the real-time experience, whether it's ordering a Grubhub order or Uber Eats. You can see the customer experience of real-time delivery and even tracking that from the restaurant all the way to your doorstep. Amazon today, same-day deliveries. So when you look at that customer experience, whether it's a consumer or a business, payments are no different. They are demanding the real-time experience, and they want the payments also moving in real time. We see that firsthand, even with request for payment functionality. When the consumer can see that money moving from their digital wallet to their bank account, or from their bank account to a investment account in real time, even through a request for payment, that is a very much of a fulfilling experience, and that also see a very high success rate when it's real time. Even account validation, when it's real time to help with fraud mitigation, that is a very much of a success rate. Otherwise, what happens is, in the past, we used to use ACH and do penny deposits. Most of the time, that confirmation doesn't happen because the consumer get busy. They forget to come back, log in after 2-3 days, look at how many pennies were deposited to do that validation, right? So with real-time payments, we definitely see that.
That's an interesting one. There are so many aspects of the customer experience that it impacts, but it's interesting that you mentioned the micro deposit, I guess, example is a way to describe that. And I used to just kind of chuckle to myself because obviously I'm, as I said, I'm steeped in this because of just my career, but just also as a consumer, you get to this place where you can really appreciate the onboarding and just how slick it can be and how speedy and how really, really good for maybe just, online account opening or something like this. And the engineers and the product managers have just thought of everything. And they're whisking you through that process. And then you get to the point where you're trying to fund the account and they're like, come back in 3 days, which seems to, make all of that, expediting of onboarding a little bit, for naught. If I'm going to take a 3-day break and hopefully come back and complete this process. So yeah, that's just a simple one, but a really important one. What about, and this is one that I think just goes in lots of directions, especially for the bank operators, the employees, but just operational levels, because I know it's the case that the bankers, and they can do things that are just really impressive in terms of sort of the swan's feet. The customer's not aware of it, but it's a lot of work, and sometimes it's fraught with the potential for error. So just on the operational efficiency side, what comes to mind first for you there?
With real-time payments, I think that was a change. We saw firsthand what operational impacts happened within financial institutions. Because before real-time payments, it was batch. Once the batch processing done, everybody goes home. Saturday, Sundays were not necessarily processing days. So there was definitely a mindset shift to a 24/7 operational mindset, right? Because your customers are transacting now on a 24/7 basis. So there was definitely a learning curve for the financial institutions and also the technology providers who support that tech stacks and provide sometimes even customer support to move to a 24/7 operational mindset. And then all the reconciliation and balance that is not after the fact, once a day batch processing. So you also need to think about how the settlement and reconciliation happens in real time, and the money is moving between customer accounts as well as the institutions. Because with RTP, it's real-time gross settlement between the financial institutions as well. So you have to think about your liquidity, and also liquidity management comes into play for that 24/7 operational mindset.
That's a very good point. You're talking about potentially very large outflows that are occurring in real time, and working on the assumption that the ledger balances are reflecting, to the second, the true balance, where that might not be the case. Fraud and transaction monitoring, if you will.
That was also a very different mindset than doing the fraud checks before a batch process of payments go out, right? Very early days, I interviewed many fraud vendors to look at different fraud solutions, even before the clearinghouse, very early days of real-time payments. Most of the time, there were card solutions or other alternate fraud solutions which were brought to the table to solve the problem of real-time transaction monitoring. But the industry has evolved. There is many strong fraud mitigation platforms now deployed across the ecosystem. At the same time, I think you can see a lot of new technology being used. I also stress fraud takes multiple levels of mitigation. I don't think we should wait till the bad guy gets in the door and then we try to catch the transactions in flight, which is at the network level. Always encourage to strengthen the front door first and keep the bad guy out first. Those are the entry points, whether it's digital banking platforms or internet banking and other entry points. And then you also have a lot of mitigation you can do before even the transaction is initiated to see whether this is the customer. Is there any anomalies? Do we need to do reauth or do another second level of authentication or OTP? And then comes to the third level. Once that transaction is initiated, what can we do at a network level? That's where our consortium data comes into play, because sometimes the bad guys move from one network to the other or one financial institution account to the other. So we continue to build and strengthen at a network level, at the clearinghouse, on the RTP network, and all the other networks we support, to make sure that we are doing the right thing at a network level to do the fraud mitigation as well.
That's a really, I think that's an important point, because I know you often hear, certainly it's top of mind for the professionals, the banking professionals whose responsibility it is to manage fraud and transaction monitoring and so forth. But they might say somewhat reflexively, faster payments, faster fraud, instant payments, instant fraud. So we really have to see, I like the way you put it, and even in terms of like, before you get to the transaction monitoring, let's make sure that we have a good front door policy. So this begins to become your KYC needs to be hardened to the point that you have a high level of confidence with the transactions that will occur, once the customer is onboarded, as well with the AML. But I guess a question I have for you is, do you see interesting opportunities to have AI operate, be trained on the sort of consortium data that you described, and help, whether it's the clearinghouse or other third parties or the financial institutions themselves, up their game as it pertains to the in-flight monitoring of transactions based upon?
Definitely. I think there is opportunity. I think with AI, what I would encourage to do is really understand the models, understand what data goes into it. Otherwise, sometimes you could have these hallucinations coming and you would not be able to explain the results. I think there got to be some sort of a validation mechanism when a machine is making the decision, to make sure that we understand what are those inputs and what are the outputs out of it, and what did we put into this black box, right? That if you look at AI as a tool, it has to be also very much controlled in a way that we know what's going on, and it cannot be just a black box. So definitely there is opportunity, there is potential in the technology, but it depends on how we build these models, how we keep improving upon them, and what data we feed into them, and what outputs come out of it, and what validations we take after the output comes from these engines.
And let's talk for a minute about the domain of data analytics, and perhaps the personalization that becomes possible with those analytics. But if for this domain we consider for a moment, as I said, maybe more so the competitive advantage that could be conferred rather than the risk, let's contemplate an institution that has gotten itself to both real time at the core level, as well as real time for payments. What do you see as being new possibilities for that institution that's real time in both places?
I think today we collect a lot of data, whether it's financial institutions, technology providers, fintechs, volumes of data, but I don't think we have really harnessed the potential of that data. There are tools still being used to process the data, but the insights and the power of that data is not really harnessed in many places. So there's a lot of potential, I would say, whether it's to understand the customer better and also be proactive. I've seen from organizations, even as a customer, when I call, they would already recognize me. I don't need to even tell who I am. Sometimes I just need to authenticate myself, and simple things like that from customer service to predicting what I would be calling about. If I had a transaction rejected, am I calling about that? If I have a flight delayed, am I calling about that flight? To bring that to payments, I think we can do a better job with that data. I think we need to be more proactive and look at the customer behaviors, and then take it another step further on being proactive on offering services. If they have a college kid, they're looking for a student loan, or they're looking to buy a car, and depends on a lot of customer data. I think there's a lot of things we can do from that standpoint to cross. And then I think we already touched on the fraud mitigation. Again, data can be used, whether it's AI engine or a fraud mitigation engine. I think data can help mitigate fraud as well as help the customer experience be better, not to have false positives as well.
Another domain that is certainly impacted by this convergence. Maybe talk for a moment about just global interoperability with the other real-time payment schemes in other parts of the world, and maybe what the clearinghouse is doing in that area so far.
Yeah, so I think when we implemented the real-time scheme domestically here in the United States, I think one of our goals were to make sure that just like domestic transactions can settle in 15 seconds or less, why wouldn't the cross-border transactions also be as efficient as that? So we embarked on a pilot a couple of years back, and we did that pilot with the European counterparts, connecting RTP to RT1. The pilot was a success, but we paused that effort momentarily to make sure there was a strategic assessment, and was it the right time to do real-time cross-border? And we have now restarted that effort again, engaging both sides, the European counterparts, and then the banks from both sides, and revalidating what the market fit, what that solution should look like, and who is ready to implement. There was also competing priorities in certain jurisdictions to upgrade the technology. Some were not ISO 20022. They had some technology infrastructure to be upgraded. So that was another reason we had to pause for them have a higher priority on their domestic priorities before they looked at cross-border. And also the model we implemented, we wanted to make sure there are some key tenets addressed. One was the transparency of the transaction and the cost. There are no surprise penny deducts in the middle. At the same time, there is also tracking capability. And then also there is a simplification of the correspondent banking model. Because today a transaction could flow through multiple correspondent banks, but in the model we implemented, it would be one provider bank in one jurisdiction talking to the other provider bank on the other side. So there are no multiple hops of that transaction as well. So it was not just the speed, but also the other benefits the customer will get. So certainly the cost will be then less because of that simplified model. So that was another goal as well. I think intention, though it was to start with one corridor, it was to really do not a bilateral model, but a multilateral. So connect other corridors as well and do a multilateral real-time payments. We also implemented a switch in the middle so that we minimize the changes that we would introduce to those local real-time payment schemes. So the translation would be done in the middle, and we minimize forcing any changes to those domestic schemes.
That's, you can begin just with your comments to understand the very serious implications of that interoperability and the need for it. Also the impact to certain niches of banking, such as correspondent banking. While there may not be a huge number of players in that space, there are some very large players in that space that might, a small number of them handle a majority of the volume. I'm not going to hazard a guess on this episode, but it does begin to make you wonder what happens to what's been a process of managing lots of Nostra Vostra accounts, in lots of different regions, and the opportunity for that potentially to be vastly simplified. So I'll be watching. I think that'll be interesting as it develops.
Definitely. I think there's more of opportunity there.
Well, let's shift for a moment. That was very helpful. I think just kind of thinking about that in terms of those domains of banking, might be an instructive exercise for lots of folks who are trying to just understand this at a deep level. So thank you. But let's talk for a minute about, I guess you could say, some of the use cases that you're beginning to see. Finxact, as you know, it's not your core of yesteryear. It's a different animal, if you will. It's a platform for banking, fintech, and embedded finance. And yes, it's the case that we are helping institutions, very large institutions, think about how to modernize their infrastructure. And we're helping fintechs that are going direct to consumers, partnering with financial institutions, helping other enterprise brands, if you will. But embedded finance I think it's beginning to become apparent to those that are paying attention that it's expands so many potential use cases for existing brands, enterprises, corporate enterprises, brands, if you will, to deepen a relationship that they already have with customers. They have a customer journey. It's working well, but they see an opportunity to deepen that relationship by being helpfully offering a banking product or service in the moment, meeting them right where they are. And it's just catching fire. We know that because we're helping lots of corporate brands do precisely that. And RTP is playing a big role in it. Maybe share with us just for a minute your thoughts on how RTP is impacting the world of embedded finance.
I think you said it well. I think when I think about embedded finance, I like say it is at that moment of time when the need is there. I think you want to make sure you are there to service that customer, whether it's a consumer or a business. So that goes hand in hand having the real-time capability. So that's where the RTP network has come into play, where then you can either make a payment or move that money in real time. So at the time of need, whether the consumer is trying to buy goods or services, whether a supplier is getting paid for a delivery they made to a restaurant, I think it is about making that payment in real time. At different platforms, I think you can look at it from a back office to a consumer platform or a business accounts payable, accounts receivable platform. I think embedding real-time payments into those have tremendously helped, whether it's a consumer or a business, with moving that money or making that real-time payment possible. The other thing I would also say is today, when you look at employees from a use case perspective, saying you can work today to get paid today. So gig economy workers getting paid is one of the top use cases you see, where the Uber driver can work, get paid today so that they have money to pump gas to work tomorrow. So that's another good use case we see as a top use case. And then the wallet drawdowns or account to account, insurance disbursement, and the list goes on. And you can tell how real-time payments is getting into daily lives of customers and businesses, which helps with their liquidity, which helps with the user experience, like we discussed earlier, which also helps with financial planning, inclusion, so that real-time payments is really there to serve, whether it's a consumer or a business area at the time of their need.
I think it's an excellent point that you make, perhaps especially in the gig economy, if you will. But why shouldn't access to earned wages be as instantaneous as real-time payments? And RTP makes that possible. So whether you're making a delivery, whatever the case happens to be, once it's made, you should have access to those funds, and you do. And Finxact is facilitating that. But we're able to facilitate that because we have the RTP rails to do so. And then the same thing, and you also mentioned the benefit redounds, back to the merchant who might be, providing the food that's being delivered. Well, access to working capital should be instantaneous as well. If we have the knowledge about the business and the loan decisioning is in place to make that, then it shouldn't move away. So all of this, really, we say this often at Finxact and Fiserv, but the convergence of real time is coming from so many different directions.
And that's absolutely true. I think one of the opportunities also is the fintechs and other innovative organizations who can innovate on a platform like Finxact, because you're providing that platform to innovate and implement those new use cases. You could see how the earned wage access is given to many, many employers through some of the fintech providers where they can now facilitate these transactions to get paid faster.
This next use case that I want to spend a minute talking about, I don't think that it snuck up on anyone. I think that we saw it coming, but perhaps it just arrived a little sooner than expected. I'd love to get your opinion on that. But in the early days when we saw, as I said, some of the predecessors to the clearinghouse, and you could start to imagine, okay, well, some of the early use cases would be P2P, perhaps, access to earned wages for direct deposit, some of these things. But I think point of sale was, maybe for good reasons, envisioned as being just down the road a bit further, several more years out. But it's not, it's here. And Fiserv is a tremendous example of that being here with Walmart, which I'm sure you're aware of, but Fiserv is helping Walmart to enhance its pay by bank capabilities, both in store and online. And the implications for that are huge. And so I'm not going to start you off in one direction or the other, but just what do you see coming there? And did you see that coming as quickly as it?
We definitely saw it coming. It was definitely in the consideration on our roadmap when we expand our request for payment capability to make sure that it is on the roadmap. But like you said, it was a future use case. It is still on the roadmap for us to implement, because we want to make sure when we implement use cases on the TP network, we take safety and security to the uttermost importance, and we want to make sure the financial institutions and their customers are protected, and that we do not implement use cases before the proper controls are in place. Like I said, whether it's from the digital entry point to all the way, whether it's the point of sale or in between, I think you want to make sure all the controls, the validations are in place, and that you can really know who the customer is, who is transacting for what. And we are continuing to do improvements on the network. In the next 2025 release, we are putting purpose of payment codes, so that will go along with the payment, which gives more transparency and visibility of what that payment is for. And there is other improvements we are continuing to do to the network, the technical messaging, and then all the infrastructure. That way we could build and strengthen those capabilities of knowing the customer, what they're transacting for, and at which point, and what the use cases are. So we definitely see it coming, and we are also preparing the network to support it when it's ready and when it's time. So like you said, it will revolutionize the industry, how we transact, how we even give rewards. We know as customers, we are quite used to certain rewards when we purchase goods and services. So I think it's all going to change. And we see that change coming, and we are also prepared to service those new use cases and changes coming in the industry to move those payments in a real-time fashion on the RTP network.
Would you hazard a guess for, or I should say an informed prediction for our listeners about how far out is that payment option from being just as commonplace as, the reaching for a credit or debit card payment at the terminal?
So I'm going to take a little walk across the globe. I travel quite a bit, and I have seen certain countries which adopted real-time payments net new. Some jurisdictions did not have the technology burden like we do. It was a net new implementation. So India is a good example. You can see how the system is sucking up cash out of the system, and digital payments has revolutionized, whether it's the tea vendor on the street, they call it chaiwala. Now don't even have to touch any cash or cards or any of that sort. Keep on doing what you're good at doing, making tea and putting it across, and you can see somebody that the customer's lining up, scanning a QR code or some other means of payment, and it only makes a ding or an announcement through a speaker. It was very impressive for me to see how the payment announcement is coming for the vendor that so-and-so paid so much, and they just pick up the tea and move along, pick up their food and move along. And vendor don't do anything other than do what they're good at doing, which is making tea or making food and putting it on the table, and customers are walking away with the stuff. The payments are a thing which is happening automatically, that the vendor don't have to touch money. So that being said, I think we have a long way to go. We have a very complicated tech ecosystem in our country. Sometimes it's multi-layered. I saw this firsthand in the industry. Sometimes the mobile platform is provided by one vendor, and the web internet banking from another, and then the core from another vendor, right? So bring three of them together and have a conversation about supporting real-time payments is a tough one, which I have done for many, many institutions when I sat on the Jack Henry seat. I'm sure on the Fiserv side, you see this as well. And not everything is bought from Fiserv, right? So I think we have also a due diligence and a duty as industry leaders to make sure that we are doing the right thing today to enable that and come to that fusion point where some of the other countries have already got it. It is a long journey. We also have 10,000 institutions compared to a few tens or hundreds of institutions like other countries. Also, we are not dictating changes. Like in some countries, the central bank will say, line up and do this, and all the institutions will do it. But in our case, it's a very democratic approach. So it's going to take time.
One more use case, if you don't mind sharing your thoughts on, and I think it's certainly not limited to Biller Direct, but Biller Direct it's a model that has persisted for a long time and for some good reasons. And for those listening that may not be familiar with just the term, most of the time when a consumer's making their payments to different providers, vendors, utilities, whatever the case may be, the primary options, if you're not just going in store, would be Biller Direct. So you're going to that provider's website and you're paying them directly. Or you're handling that through your financial institution and their online banking. There's an important element of RTP, which is RFP forgive the acronyms, but request for payment is really it opened up a lot of new use cases where it's critical. It really doesn't happen without it. But I guess if you could just for a minute. If you have any thoughts on, does this impact the or tilt the scale between Biller Direct and online banking as a preference for consumers, and RFP generally, just what you see in the future for it?
I have a lot of thoughts about RFP. Bill Pay is very much close to my heart. Before I took up real-time payments, I actually worked on the Bill Pay domain, Jack Henry. But like you said, RFP is really going to revolutionize that bill pay experience, whether it's for a consumer or a business. Just for the audience, I will very quickly say what RFP is. It's a request of payment. It is a request to pay. Think about your cell phone provider requesting you to pay that bill. It's coming through a secure banking channel. So it's the request of payment is coming through your secure banking channel where you can trust, and you can really put your trust in that banking channel requesting you to pay that bill. So that request of payment comes to you from a biller, and then you have the right. You are in control. It's not like an ACH debit coming and taking money away from your account compared to a Biller Direct model or the other payment mediums, which you don't really control and authorize that payment. But the request of payment puts you as a consumer in control of making that payment, validating the amount. Do I owe this? Do I agree with this? And is this my cell phone provider? And is the amount correct? And then you authorize that credit push to go. You are making that payment to the service provider you agreed to. And then you also get real-time confirmation. The other benefit you also have is with ISO messaging capability, which RTP supports, you can also get additional details of that. So let's look at how this is going to roll out. I think when you look at requests for payment, there are many places starting within the institution. Bank as a biller could start sending requests for payment for whether it's your credit card or mortgage or your car loan to their customers on the consumer side to say, pay your bill. So it's a bank as a bill. Then all the merchants who bank with the financial institutions, whether it's your cell phone, whether it's your energy companies, can start generating the request for payment through their financial institution to their customer base and making the request to pay, which puts, again, the customer in control of validating that payment and authorizing that payment, instead of a ACH debit coming and taking the money without your control, right?
Well, Rusiru, I appreciate it so much. You're a wealth of knowledge. Clearinghouse is lucky to have you. And our listeners have been, I think, lucky to, of course, have this time with you today. Take care. Don't be a stranger. Hope you drop in again soon.
Thank you, Christopher. Pleasure.